10,000 miles a year on it, and you say, well, 8,000 of those miles are Posh related, then you're using your vehicle 80% of the time. So you get to write off 80% of the cost of that vehicle. So if you spent 40 grand on a new or used SUV, you can do 80% of that, or 32,000 bucks. That's a great touch. Okay, health savings accounts. Who has one right now? Who's using one? Greg, you like them?
Yeah.
Best things in sliced bread.
Yeah.
Yep. So to do an HSA, you have to have what's called a high deductible health plan, HDHP, high deductible health plan. But it's just very high deductible. So what this means, and this is available to anyone, sole proprietor, S Corp, LLC, anyone. It's the only way that you're going to be able to deduct medical expenses. I had a lady in my office, a couple on Thursday, and they had a baby. And they said, we spent about $6,000 in medical expenses, and we want to deduct it. Well, they made quite a bit of money, and when we put their stuff in the software, they made too much money to deduct it. And I said, do you have a high deductible plan? Yes. That's why we had to pay $6 grand out of pocket. I said, has anybody talked to you about an HSA? No. I said, well, let's talk about it. So we talked about the fact that for 2016, you can put as a family $6,750 into this plan max, or anything less than that. And whatever you put into that is totally tax deductible. The whole thing. So, they'll give you a credit card to help use this HSA. So when you go to the doctor, when you go get a prescription filled, you give them your credit card, and the money comes right out of this HSA account. So you're now paying that money with pre-tax dollars. Make sense? Am I losing you? Okay? So this family that was in my office Thursday, if they would have done this last year, that $6,000 that they would have paid would have been totally tax deductible. As it was, zero was tax deductible. Would have saved them probably $2,500 in tax had they have done that. But nobody mentioned it. They were new clients.
Do HSA dollars roll over in the course of the year?
Yeah, that's the great thing about HSAs. If you put $5,000 into an HSA and you only use $2,000, the other $3 just rolls over. And then you can put the max amount in the next year, just rolls over. Heck yeah. Well, military has pretty good insurance. You may not have a high deductible plan. You better check on that first. HSA is not going to help you. Yeah, if you're military, it probably doesn't apply.
So how do you start an HSA? It's like,
great question. You can go to your insurance company. You can go to a bank. You can go to a credit union. They all will do it for you. They're free.
okay.
They're free. All you have to do is put your money in. Okay? Now, ladies, the thing that you need right now with your own business, you need somebody that will tax plan. Who makes the big donation or what? They do a good job of preparing taxes. They really do. We thought it's interesting in Utah they charge more than we do as a CPA, which is really interesting. But what they will not do for you is they will not plan with you. Do they plan with you? They just prepare. Yeah. And that's what, most of these people do. So you need to find a CPA that will plan and talk to you about Section 179, and talk to you about health savings accounts, and talk to you about retirement plans, and what fits you. Why don't we start putting some money away that will be tax deductible for you, and help you on your taxes, and help you start building for retirement. Talk to you about how to organize your business. Is it time to incorporate? Chances are, if you go to H&R Block or Liberty or Jackson Hewitt, you might get somebody that knows what they're doing, and you may not. But that's kind of true of CPAs as well. I can say that. You need to find somebody that will do a good job planning, because that will become critical once you start making some pretty good looked at the slide a minute ago. Probably the most important thing on this slide is receipts. We get the question several times a day, what do I need to keep? The answer is, if you want to deduct it, you have to keep it. So, I'll give you an example. Let's say that you go to Sam's Club or Costco and you spend $500 on product or something for your business. And you get audited. And you have that right on your debit or credit card that says Sam's Club $500. The auditor is going to say, what'd you buy? Well, I bought stuff for my business. Okay, show me. Well, it's right here on my credit card. So, you could have bought a lawnmower. How do I know what you bought if you don't have a receipt? You have to keep receipts. Ladies, you have to keep them. Okay? Now, I want to tell you what to look for in a CPA firm. This is something that becomes important. Not everyone knows your business. They need to know direct selling businesses. Not everyone does. So when you're trying to find someone, talk to them and ask that question. Do they plan? We just talked about this. Do they plan or do they just prepare your return? You need someone that will plan with you, that will take the time. In the last group, I told them I had a client in that we've done their work for several years, and we always send out a letter in the fall that says, hey, it's time to come in and do some planning. We do, I think, over 1,000 businesses right now. A lot of them come in. Well, this guy didn't, but his business tripled in 2015. So he comes in the end of January, brings his stuff, and I said, you're in big trouble.